All right, good afternoon, everyone. This is Joe Bacella, Director of Client Success here at Chaikin Analytics, and I'd like to welcome you to our presentation of Trade Like an Expert, Secrets to Winning Options Trades from Two Pros. Presenting today is Marc Chaikin, founder and CEO of Chaikin Analytics. Now, as a reminder, this webinar is being recorded, and we will be sending a copy of this to everyone who has registered today. Please submit your questions throughout the webinar using the Zoom Q&A window, which you can access in the upper left-hand corner of the screen. Now to get us started, let's go ahead and welcome Bob Lang to the webinar. Bob, take it away.
Thanks very much, Joe. Great to be with all of you this afternoon, and it's awesome. Also awesome to be with Marc as well too. Marc is a good friend of mine, and we've had some great webinars together and great times together. And I know a lot of you out there, if you don't use Chaikin Analytics, once you this next hour or so, I suspect that you're going to be hooked into using the tools. I use them every single day to find ideas, and Marc's research team is unbelievable, and they've gone so far over the years to try and find the best of the best ideas out there for everyone to trade off of. So whether it's options or stocks or so forth, I know he's got a lot of great examples here to share with us. But it's been an interesting week. I know Marc and I are going to talk about that in just a couple of minutes. But as we move forward, we have about 7 more weeks until the end of the year. We have a Fed meeting coming up in about a month, and it seems that the resolve is to raise interest rates regardless of what is happening in the economy. And inflation kind of has me scratching my head a bit. But in any event, we have to react to what's happening in the markets and not guess and try and anticipate. So that being said, I'm going to introduce Marc. Marc's again a wealth of knowledge here, and you guys are in for an absolute special treat with his presentation here today. Marc's been in the business for many years, 50 some odd years, and he's again I've had so much fun with Marc over the years. We're doing some of these webinars together with him, and I look forward to seeing what he has to say today. Marc, take it away.
85% fundamental, 15% technical. And I created the model because self-directed investors didn't really have the tools and the discipline to successfully manage their own money.
And that's created by famous analyst and entrepreneur Marc Chaikin.
I'm a big fan of Marc Chaikin, though, so it makes me nervous, Scott, because I like his metrics of looking at the market.
Marc Chaikin.
Marc Chaikin.
An expert known on Wall Street for developing computerized stock selection models.
Joining us is Marc Chaikin. He is the founder of Chaikin Stock Research. Mr. Chaikin, welcome.
All right. Thank you, Bob. Thank you, Joe, and welcome everybody. So a little what we call a sizzle reel to get everybody revved up, because we've really got some exciting stuff to share with you tonight. Bob's going to weigh in. I know he's had some really successful options trades here in the last 2 days in his trading room, and he uses Chaikin Analytics, and that's part of the reason, although just a small part, that he's been finding big winners in the options area. We're going to talk about the secrets to winning options trades, but really what it all boils down to is knowing where individual stocks are headed. The options strategies are pretty easy once you know what stocks to zero in on. So in today's webinar, I'm going to share with you my 50 years of experience on Wall Street. During that time, I've survived 10 bear markets. And I did that by using technical analysis as a complement to the fundamental research that I had access to through brokerage firms that I work for and services that I subscribe to. And because of that, I've been able to survive these bear markets, preserve capital, actually make money, because put options are a joy during bear markets. But the bottom line is, I don't see a bear market around the corner. A lot of people do. I don't. I think the markets are fairly solid. We were a bit cautious going into the election. That has now been resolved. And what you're going to hear today is really the result of the fact that I've been mentored in my career by some of the smartest and most successful institutional investors. Now, institutional investors use fundamental analysis to make their decisions. And what I learned from them, both colleagues and clients, is reflected in the Chaikin Power Gauge rating. It's really our edge for you. 20-factor fundamental model. It's the culmination of my life's work. And we're going to spend the beginning of the webinar trying to, if not convince you, show you how the Chaikin Power Gauge rating works and how successful it's been over the last 5.5 years at helping traders and investors find the right stocks and, more importantly, know what stocks to avoid. It's now being used by the pros and quoted in the media, so a lot of the big hedge funds, Paulson, Soros, Fidelity, are using it, and some of the great services from macro top-down work that's being done by John Malden at Malden Economics to John Carter's Simpler Trading to Bob Lang at Explosive Options. So it's both validation, but it's also very exciting for us because it tells us that we're on the right track. So in today's webinar, we're going to talk about successful trading post-election, how to find winners and losers with the Chaikin Power Gauge rating and relative strength, how to use Chaikin Money Flow to predict future price movement. And that's what Bob talks about a couple of times a month on Mad Money with Jim Cramer in his Off the Charts segment. In fact, Bob's the reason that Jim has been zeroing in on Chaikin Money Flow, although he was a client of mine during the 90s. He's now using Chaikin Money Flow, and Bob's been a real instigator of that, so thank you, Bob. We're going to show you how to improve your timing with buy and sell signals. Obviously, if you're an options trader, timing is critical because premium decay is your biggest enemy. We're going to show you how to play good defense, particularly important after a regime change like we're witnessing right now. Which industry groups are going to be hurt by the new administration? Which ones will be helped? Sort of some obvious answers there. Aerospace and defense should do well. Some of the healthcare stocks are under pressure, although others are going up. And then finally, post-election, how do you profit? Well, you've got to know the sectors and the groups that are going to lead the way or lag the market. Now, I want to ask you a question to start off the webinar. Did the election have you spooked? If it did, type a big S into the question box. And if you typed in yes, you are not alone. People were sitting on their hands going into the election. They were spooked by the potential for a big decline if the wrong outcome happened, and I'm not sure what the wrong outcome would have been, but certainly it wasn't a Donald Trump victory because the Dow Jones closed at a new all-time high today. And what happens when you pay attention to the headlines and to the talking heads on CNBC who are just on there to scare you because that's how they get invited back, and Bob can speak to that, although not everybody who's on there is just spouting scare headlines, but one major analyst has been saying you got to be in cash, go to cash, completely in cash. Dead wrong. This is someone who gets $30,000 a year for his market letter. You've got to become independent of the gurus in life, and we're going to show you how you can do that. Now, I'd like to start out by focusing on the market, because if you know where the market's likely to be going, where the market's headed, then that again makes your options trading that much easier because you're trading from the right side of the market. Now, we have 3 proprietary indicators within Chaikin Analytics to help you know where the market's going. Chaikin Money Flow, which has been outstanding in the sort of software world since 1981. I'm going to show you how to use that on the spider. Chaikin Power Bar, which tells you the number of stocks with bullish, neutral, and bearish fundamental ratings within any industry group. In this case, we're going to look at the spider. And then finally, how is the relative strength of the equal weighted S&P to the spider itself, which is capitalization weighted. So before we start, Bob, as we were prepping for this webinar, said, did you see that move in the bonds yesterday? It's unprecedented. Yields went up over 2% for the first time since last January. They were in the 208 area the last time I looked. Very recently, they were down around 140 for the 10-year Treasury. This is the 20-year Treasury. But yesterday's move should not have been a surprise, because look at what's happened since July. The Treasury has been in a steep downtrend, making a series of lower highs and lower lows. Yesterday was the culmination of that on very heavy volume on this actively traded 20-year Treasury ETF. So what can we take away from that? Well, what we can certainly take away is that you can't fund your retirement in a zero interest rate environment. So we've been warning people off bonds for over 4 months, probably closer to 6 months. Bonds were at unprecedented new highs back in the summer. There just didn't seem to be any room to go but the other way, because so much money was pouring into bond funds. So if you can't fund your retirement with fixed income investments, then how can you do it? Well, it's with stocks. And of course, options are the leverage way to trade stocks. So let's look at the S&P 500 over the last year. We made a W bottom back in January and February after a steep decline of more than 10%. And Chaikin Money Flow, which is our go-to measurement of what the institutions are doing, was positive even as we were making the low, which is a phenomenal buy signal, and stayed positive as the market broke out and banged up against resistance just under 2,200. Now, what happened in September was a lot of money started flowing out of the market. And we know that because the Chaikin Money Flow went red and stayed there for the first time since December, January. And the reason was that institutions were raising cash. Institutional cash levels going into the election, 5.9%, highest cash in the mutual fund sector since 9/11, 2001. So heading into the election, Chaikin Money Flow was negative. We've now had a wonderful 3-day rally. We're back up against that 2175, 2180 resistance area, but Chaikin Money Flow is negative. Now it'll go positive today, but it's certainly not as robust as it was up here, and we're at the upper volatility band. So what do we expect out of that? Well, we expect the market to experience some profit taking, pull back. It'll all give us time to evaluate the sectors that are going to move. We already have some clear-cut indications about the financials, technology, healthcare. So we can take advantage of that if we get a pullback. And pullback is likely. Unlikely that we're going to break out right now above 2,200 in a meaningful way. Could do it later in the year. Now, the final indicator that we love is what's known as the Guggenheim Equal Weighted S&P, RSP. When it's outperforming the spider, the markets do well. It means that there's confidence and they're not just gravitating toward the big cap stocks, affectionately known as FANG. Well, guess who coined that phrase? Bob Lang. And what's interesting about today's market is even though the S&P was up and it finished up about 4 points with the Dow making a new high, Facebook, Amazon, Netflix, and Google were all down dramatically today. That's actually healthy for the market because over the last 6 weeks, the equal-weighted S&P has been underperforming just as it did all through 2015. Now, why was that? Because the FANG stocks were doing well and the average stock in the S&P wasn't. So, bottom line conclusion, we're sort of in a better trend than we were, came out of nowhere in terms of the market having been down 9 straight days leading into the weekend. And then on a dime, everything turned in the election and the aftermath with Donald Trump being very conciliatory with a good meeting at the White House today seems to be on solid footing again. Now, it's obvious that we've been in a volatile market, but volatility is not a recent phenomenon. Every year since 1980, we've experienced a correction of some sort or another. In fact, over the last 30 years, the annual correction has averaged 14%. Now, that's slightly impacted by a couple of bear market years. But bottom line is those who stayed the course were rewarded. Now that's pertinent to your 401k plans, your retirement nest egg. Obviously, as an options trader, you want to be nimble and trade both sides of the market. But it's important to realize this is a chart of intra-year declines versus full calendar year returns, courtesy of First Trust advisors. And what you see is that since 1980, 36 years, every year you get a correction of some sort or another. Sometimes they're between 6 and 10%. Those are the easy years because you buy the dips. But basically, people have been rewarded by staying the course. And here is another way to look at pullbacks and put them into perspective. The whole point of this is to give you some sort of guidelines, some ground rules, some markers, some road signs to help you deal with volatility. Since 1945, there have been 75 declines of between 5 and 10%. They happen virtually once a year. Average decline 6%, average length a month. Here's what's really important. The average time to recover that decline is 1 month. So you get these V-shaped bottoms and they come back very quickly. Now there have been 27 declines of between 10 and 20%, very similar to what we witnessed in January, February of 2016, and prior to that in August, September of 15. Now those declines, anytime you get past that 10% mark, you really need a W bottom. You need to test the lows before you move back up. So what was the recent decline? Heading into the election, 5%. Even though we were down 9 straight days, you only lost 3% in those 9 days. And you've already made that up and more. So total of 102 declines of between 5 and 20%. And the 10 to 20% declines are the most challenging because the average decline takes 4 months, and the recovery time, though, is still 3 months. Now, the bigger declines are bear markets. There have only been 11 bear markets since 1945. So if you're constantly betting on a bear market, you're betting on a long shot. Now, will they happen? Of course they will. Do we hope we can identify them in the early stages? Yes. But predicting bear markets is like predicting the outcome of a presidential election. We just saw how difficult that was. All the polls got it wrong. So what's the point of this? The point is to put pullbacks into perspective. They're your friend. Take advantage of them, but you've got to know what stocks to trade, what stocks to buy, what options to be looking at, and that's what the balance of this webinar is all about. Now, here's the likely scenario for 2017. I love quadrants. In our portfolio health check product, we have a quadrant. We call it our power grid. And in that power grid, the upper right is really the most favorable. On this chart, the most bullish is falling interest rates and rising earnings. What we're likely to have in 2017 is rising rates, but rising earnings. Now, we've been through 6 quarters leading up to the third quarter earnings that are just about wrapping up. And they constituted what's known as an earnings recession. Because of energy stocks and a strong dollar, which hurt multinationals, we had 6 quarters in a row leading up to the October third quarter here, where earnings were down. And this caused a lot of analysts to say, oh my God, recession coming, bear market. Well, the reality is we broke that trend. Fourth quarter is likely to be better than the third quarter. Part of the reason is businesses are going to be more optimistic with Trump in the White House in 2017 than they were likely to be with Hillary Clinton as a victor, because Hillary Clinton represented regulation and higher minimum wage, a lot of things that businesses are leery about. Trump is, in theory, going to be more business friendly, and so we've got a really good scenario for 2017. Gradually rising rates. We're probably going to see a rate hike in December. Depends who Trump puts in as Secretary of the Treasury. There were rumors today that Jamie Dimon might be offered that post. That would be great. There's a really seasoned hand on the tiller coming out of JP Morgan Chase. So here's your likely scenario for 17. Higher rates, but rising earnings. That's actually a very bullish scenario. It's good for the consumer because it usually leads to wage hikes, and maybe the consumer will open up his pocketbook and start buying again at the malls. So a lot of this webinar really embraces what Warren Buffett said, that you should be fearful when others are greedy, and greedy only when others are fearful. And we've certainly seen a lot of fear in the market. Starting in January, February of 16, we saw the Brexit sell-off. We just saw 9 straight days down. I don't know that that was fear. It might have been just caution. But the bottom line is, we're going to show you how to take advantage of fear. Now, I've circled what happened to F5 networks, FFIV, leading up to Brexit and then past it. Now, this was an unloved tech stock, but then the Power Gauge rating, which is our fundamental rating, which is here at the bottom on this one-year chart, red, green, yellow ribbon showing you whether the model is bullish, neutral, or bearish, and then right above that, relative strength. We're going to explain these to you. And Money Flow, Chaikin Money Flow, which almost all of you are familiar with because it's on all of your online brokerage platforms. It's available at stockcharts.com. Institutions use it on Bloomberg and Reuters. That package is going to be something we're explaining here. So what happened to F5? Well, institutions started accumulating it. The fundamental factors turned positive. The stock was in the 105 area. And it was moving up really nicely. And then one day it spiked from 110 all the way to 125. Those were takeover rumors. And then the stock went into a sideways correction. We never want to buy a spike to new highs like that. Even if you miss out on a move, the odds are you're avoiding the pain of watching a stock consolidate or go down for 5 to 8 days. And just when it looked like it was buyable, Brexit came along. And we triggered what we call our oversold buy signal. A new 8-day low in a stock that has bullish fundamentals, so the power gauge has to be bullish, and you get oversold. Now, how many of you could have pulled the trigger on that trade, bought an option, or went in to buy the stock? Because that's really when you want to be doing it, taking advantage of fear, following Warren Buffett. Well, if you believe in what we're going to teach you today, you'll be more likely to pull the trigger, because when everything lines up, bullish, power gauge, stock outperforming the market, strong Chaikin money flow, and a buy signal, that's what Warren Buffett calls a fat pitch. And you want to swing at fat pitches because most likelihood of winning trades come from fat pitches when everything lines up. And we're going to go into detail on that in a minute. And then you got an earnings report. We have an earnings module within Chaikin. And it was a positive earnings surprise, and the stock went right back up to 125. Now you had another opportunity to buy on a pullback here. Again, a month ahead of earnings, when the stock pulled back to support, closer to the 115 area. And then another positive earnings surprise a week and a half ago, and the stock spiked up and made a new high above 140. This is what we're going to be talking about. How do you find these stocks and have the confidence to buy them? It's particularly difficult in this era of information overload. In our daily lives, it's Snapchat, Instagram, Facebook, LinkedIn, Twitter, email. Very distracting. And in the investment decisions we have to make, we've got CNBC with lots of talking heads. We've got all sorts of sources of information from Google to Yahoo Finance to FinViz and so forth, and services like Motley Fool and nice, really reliable trading rooms like Explosive Options. But it's too much information. So how do you cut through the clutter and focus, which is what's right at the center of the slide, in the age of distraction? Our answer, the solution to the information overload problem, is Chaikin Analytics for both iPad and desktop. And we've also incorporated a module from a company called Options Play in there, because while Bob Lang has come up with some really exciting winners in the options area, there are about 3,000 optionable stocks, and you can't follow them all, but our options play module, which we licensed and folded into Chaikin Analytics, will help you find probability-based ideas if you know where the underlying stock is going.
Hey, Mark.
Yeah, Bob.
I just wanted to say that I think the option, the product portion of the product that you're showing right now is one of the most revolutionary ideas I've ever come across for option traders, and it's extremely helpful and useful to me in helping me find ideas. There's millions of different trades you can put on, different types of trades of styles, but this tool in and of itself is one that really not only guides you but keeps you out of trouble, and that's really one of the most important things. Just instead of blindly just picking something out, this thing really guides you in a great way.
Yeah, that's a good point, Bob. There's a checklist in options play. Once you've zeroed in on a strategy, 5 questions that the program asks and answers for you, having to do with liquidity and whether there's a dividend coming and so forth. And the validation is that options play has been licensed by Raymond James, by Oppenheimer, by Ameriprise Financial, and by Merrill Edge. So we were actually in the forefront of recognizing a really complementary tool that's probabilities based, because Chaikin Analytics and all the stocks we're going to be talking about is all probability based. Power Gauge rating gives you a high probability of success. So the way Chaikin Analytics leads to options profits is by giving you a directional edge. I ran an options department for a regional brokerage firm called Tucker Anthony and R.L. Day in the late 70s and early 80s. Had about 250 brokers, thousands of clients trading options, and I can tell you that 95% of them lost money. And the reason they lost money is they didn't understand how important a directional edge was. If you have an informed opinion about where a stock is likely to go, and that opinion has to be a combination of fundamentals and technicals, in my view, which we synthesize into a quantitative model and a set of rules, you have the likelihood of consistent profits in options or swing trading. And with our buy and sell signals or candlestick entries, if that's what you're into, or Fibonacci retracements, better timing always leads to better profits, but it starts with a directional edge, and you've got to understand how important that is. Because of that, we've created this pyramid which encapsulates the Chaikin methodology. Volatile markets demand a disciplined methodology, but all markets benefit from a disciplined methodology. So at the top is the Chaikin Power Gauge rating. It's our fundamental indicator. I came out of retirement in 2009 to build the model and make it available to individual investors like yourself and traders. And it's proven itself, as you'll see in a minute. We also think industry group rankings are really important, especially in the environment we're in now with a new administration. Different industry groups are going to be favorable or unfavorable based on new policies in Washington. At the bottom of this pyramid, 2 only technical indicators. You don't need a whole suite of technical indicators. In my view, I've been a technician for 45 years, and if you're looking at too many indicators, there's something called analysis paralysis. And too many indicators are actually redundant. So we've boiled it down to just Chaikin Money Flow, which you all have available to you on any platform you're using to execute your orders, and Chaikin Relative Strength, which is unique to us. Now, you could get a similar suite of information from Investors Business Daily's Relative Strength ranks, but their numbers from 1 to 99. You just saw that on FFIV, we've distilled this down to a heat map, red-green, and it's smooth, so it doesn't change a lot. And then in the middle, Chaikin buy and sell signals.
So, hey, Mark, I wanted to just mention that, if you go back to that last slide for a second, some years ago, one of the greatest college basketball coach of all time, I think, John Wooden, created what's called the Pyramid of Success. And I would really say that this really mirrors his vision, the same vision that you have for others to succeed. And he created that obviously not just for himself, but for everyone else, as you've done here, trying to create, this pyramid of success. So it's no shock to me that you took that shape there to try and teach others and show others, how to build from a foundation at the bottom, how solid it is all the way right up to the top.
That may have been in the back of my mind when I created this. The reason I use the pyramid is because I'm terrible with PowerPoint, and the pyramid, capability in PowerPoint was easy for me to master. But I do know John Wooden, and I hope our traders are as successful as the UCLA basketball teams with Kareem Abdul-Jabbar and some great players, Bill Walton and so forth. But the pyramid really keys off the power gauge rating. It's your directional edge, and it's your fundamental guide, heavy lifting, simple but powerful. I've said many times on these webinars, don't confuse simple with simplistic, because the power gauge rating is like a Chevrolet with a Ferrari engine under the hood. And during earnings season, which we're winding down on, it can be your GPS, meaning that you don't have to sit on the sidelines during earnings season, but you can trade. Now, Bob Lang had a great trade in SodaStream, reported better than expected earnings. Power gauge had been bullish. We had a buy signal on it about 8 days ago. You don't want to miss those trades. Now, John Carter, who's another partner of ours, one of the great traders of all time, looked at the power gauge rating and said, this is an objective, awesome meter for stocks. There are a lot of hyped up tools out there, but when I find something interesting, I'll let you know about it. So you can imagine that a single tool that combines 20 plus technical and fundamental factors to anticipate a stock's profit potential got my attention. It's called the Chaikin Power Gauge rating, and it's an awesome meter for stocks. Now, what did John Carter see in the 20 factors that he liked? Well, he saw the factors that institutional investors look at every day to make their investment decisions. Financial metrics are 35% of the model. They're sort of the bedrock. Don't change very often. It's what a Warren Buffett looks at. Free cash flow, you can't fudge that. You either generate cash at the end of the year or you don't. You can fudge your earnings with accounting tricks, but free cash flow is what it is. Price to sales, extremely important. If you pay too much for $1 of revenue, you're on a high wire without a safety net. I've been stressing this with Tesla for the last 15 months. Also with Netflix, which just had a big move up, but is starting to give some of that back. Can't pay too much for $1 of revenue. Now, earnings are what a Jim Cramer would zero in on. And I boxed a factor called earnings surprise. The reason is, when I was at Drexel Burnham in the mid-80s, I had the pleasure of working with a gentleman named George Douglas, who built one of the top 2 quantitative databases on Wall Street called DAIS. And George gave me access to that, even though I was a retail broker, and taught me what he had learned about earnings surprises. He did the seminal research and how they affect analysts' earnings estimates. It's been documented that on a short-term basis, analysts' earnings estimate revisions are the single biggest driver of short-term stock price movements. But preceding that are positive or negative earnings surprises. So right after the close today, Nordstrom's reported a positive earnings surprise, and the stock is up over 8 points. What's going to happen tomorrow and Monday and Tuesday? Analysts are going to start raising their estimates on Nordstrom. They're like sheep. They follow one another.
We nailed that one today, Mark, by the way. We bought the December 5750s at 250 today.
The stock's $60 right now, so that's a pretty good trade.
Well,
and there's the combination of fundamentals and technicals.
Yep.
So technicals are only 15% of the model, but they keep it honest. And then we look at things like short interest, because they're pretty smart, hard to survive as a short seller unless you do your homework. And insider activity. We love to see insider buying. So the combination of all these 20 factors is what I learned working with institutional investors. And you get the benefit of it synthesized into a gauge. And how has it performed? Well, from 1999 through 2016, Using the Russell 3000 universe, the average very bullish stock has been up almost 20% a year. And the average bearish stock, very bearish stock, has been down 1% even after a 7-year bull market. So it works. And in 2015, it worked in spades because the very bearish stocks in the Russell 3000, the fracking stocks, the rails, the cloud computing stocks, the Teslas of the world, small caps in general, were down an average of 17%. The index itself was only down 1%. Now, how can that be? Well, the index is capitalization weighted. So the big stocks have a big impact. But the average stock in the Russell 3000, largest 3,000 stocks in America, down over 20% at one point during the year. The average very bullish stock down only 1%. It's the ability to capture that spread that leads to superior performance. Now, 2 other proof points, and then we'll get on with some real in-depth teaching. We have partnerships with both NASDAQ and First Trust portfolios. With First Trust, we've created 4 unit investment trusts, 20 stocks equally weighted, picked by the computer based on the power gauge and a couple of other rules that you've got to buy and hold for 15 months in this unit investment trust. They've raised over $50 million. So there's real money being managed using the same tools that we're going to give you in-depth knowledge of today. With NASDAQ, we created 3 co-branded NASDAQ Chaikin indexes, launched them 2.5 years ago. And here again, these indexes are unmanaged, meaning that they don't go in and out, take losses, take profits. They have to stay in place for 12 months till the index is rebalanced. Now, all 3 of the indexes, as you see on this screen, are outperforming their benchmarks. Large cap, where it's pretty tough to outperform the S&P 500, or in this case, the NASDAQ 300. Small cap and dividend achiever, and look at the outperformance, the small cap and the dividend achiever. Over 1,400 basis points in 32 months. Now that's big. The NASDAQ Dividend Achiever Index, which is the basis for the Vanguard ETF with the symbol VIG, which has $26 billion in it, was up 10% in that 32-month period, and the NASDAQ Chaikin Index was up 25%. That's a big spread if you're looking for yield. And the goal was to perform well, which they've done, and then have someone license them as the basis for ETFs, and be on the lookout for that over the next month to 3 months, because it's in the works. So whereas unit investment trusts can only be bought through an advisor, ETFs are liquid and tradable, and we're very hopeful that there'll be some Chaikin ETFs in the marketplace in the first quarter of 2017. Now let's get to the meat of how you can use Chaikin Analytics to make money in options trading, swing trading, and help grow your retirement nest egg. First pattern we want to talk about, we're going to talk about 3 different patterns today. Classic Chaikin bulls and bears. Classic Chaikin bull has a bullish power gauge rating. That means the fundamentals are favorable. It's outperforming the market because no matter how good your fundamental research is, whether it's a model or conventional research, if the market doesn't agree with you, at best it's dead money and at worst it's pain. And then finally, Chaikin Money Flow is strong, indicating that the institutions are buying the stock. So here's a classic Chaikin bull. WellCare Health in the medical care industry. Power gauge turned bullish here at the bottom in late January, just as the company reported a positive earnings surprise. Was in a downtrend. About 2 weeks later, it started outperforming the market because that pattern that we identified in the factor slide came into play. Positive earnings surprise caused analysts to raise their estimates, so the stock moved up for another few days, then it pulled back, and it's just kept going higher. Along the way, these oversold buy signals, new 8-day lows ahead of earnings, very powerful. And Chaikin Money Flow was strong from February through October. And At the end of October, you had yet another positive earnings surprise. Bob Lang and I were talking about this prior to the webinar beginning, and he said, you know, earnings surprises come in bunches. Well, that's what George Douglas taught me in 1984. There's never just one of them. They're sort of like cockroaches. And when that's working on the upside, it's magical. And when it's working on the downside, you can take advantage of it with put options. We also have an earnings alert indicator that we've put into Chaikin. In addition to marking the earnings, showing you how stocks perform afterward, we've got a green or red exclamation point. If it's green, the stock is likely to report a positive earnings surprise. And that's what happened. But here's a pattern we're going to teach you that's really powerful. We've been teaching this to institutional investors for over 35 years. Every new high prior to this recent high above 125 was accompanied with very bullish Chaikin money flow. So no indication that the institutions were taking profits and bailing out. But this time they were, because when the stock spiked up above 125 from under 115, look where the money flow was, negative. Great time to take profits. And WellCare was one of the stocks that got hurt yesterday because people assume that anybody who's benefiting from Medicaid dollars or the Affordable Care Act is going to get hurt when Trump repeals and replaces it. So look how wonderful it would have been to use that rule of, if you see a new high after an earnings report above the upper volatility band and Chaikin money flow is red, not green, get out. Take your profits. Take it off the table. Even in a long-term account, it's time to leave the party. Now, the opposite is the classic Chaikin bear. Fundamentals are bearish, so the power gauge rating is red. Stocks underperforming the market with weak Chaikin money flow, and Chipotle is a classic example of that. Power gauge rating turned bearish at around 690 before the E. coli problem. And the stock has been underperforming the market for about 14 months. Chaikin money flow has been negative. There have been sell signals along the way. When I did this chart, the stock was up 4.5%. So rallying off a new 52-week low ahead of the election, up toward resistance at 400. It continued going and I think closed around 397. Now, money flow is still negative. Do you want to be buying this stock? Well, it hasn't worked every other time the stock has rallied up with negative money flow, and it's not likely to work this time because the market and the model agree this stock has been toxic, and you're guessing if you're trying to call a bottom in a stock like Chipotle. That's why we call this a classic Chaikin bear.
Hey, Mark.
Yeah.
Mark, I was just going to say, for everybody listening here, I think the most important takeaway from what you've talked about here is this, is that don't look at the charts and look at stocks for what you want them to be. Rather, look at them for what they really are, the information being as objective as possible. That's one of the things that I've learned from you over the years and through using the Chaikin analytics. It just tells you what to do. It's like, you know, you've alluded to being like I mean, it's funny you mentioned Tesla a minute ago because it's almost like it's a self-driving car, right? The Chaikin analytics are like your self-driving car. It's driving for you. You know, I think that one of the mistakes and traps that people get into is they see things for what they want them to be rather than for what they really are. And you know, as you said with that WellCare example, look, I mean, it was a red signal. There's no reason to be in the name other than being short or buying puts. It's just telling you exactly what to do. I don't. It's like a manual, right? I mean, that's really what it is. It's a stock market manual or a stock trading manual for what to do.
And people should realize that even if you miss out on a stock, if you can eliminate the losers, as we'll see in a slide on playing defense, your percentage of winners goes up and your overall returns go up. So how do you find these stocks? Well, we have hot lists in Chaikin Analytics. This is our Power Gauge hot list slide where we're looking at how you find bullish and bearish stocks, but underneath it is a panel, and this is from 2 weeks ago, 2 or 3 weeks ago, from a webinar I gave on a list of about 150 stocks that I follow. And I had, because the market was selling off prior to the election, I sort of scrolled down to the bearish stocks in the list I was following. And there's TripAdvisor and Tesla and Twitter and Whole Foods, which Wynn Resorts, which is sort of under pressure, Pandora, and Nordstrom's, which has now reversed that bearish rating. But so easy to find these stocks, and we'll see examples of a couple of them in a minute. Now, the second pattern I want to talk about is what we call personality changes. And it really is the key to making and keeping profits. And it keys off what Bob Lang just said. Very often when we look at a chart or analyze a stock, we see what we want to see because we've put our feet in cement. People fall in love with stocks or they love to hate them. And you've got to be objective in the market. My good friend Marty Zweig said, listen to the market. The market will tell you everything you need to know. And so spotting personality changes, it can be really easy. We define a personality change as a stock which had been outperforming the market and then begins to underperform the market. And we make it really easy by converting that into a red-green heat map, and then the reverse is true, and it can lead to some big profits. So here's Qualcomm, which had had a bearish power gauge rating. It was one of the most mismanaged tech stocks. They have chips in every smartphone on the planet, but the company was being completely mismanaged. They actually said in an analyst meeting at a Merrill Lynch technology conference, they didn't know how much they were spending on research and development and what their return on it was. Well, they've turned the ship around, and the power gauge rating picked up on it in mid-May with the stock at around 53, and it got that bullish personality change even before the power gauge. So that's what this zigzag is all about. Qualcomm went from underperforming the market all through 2015-16 to outperforming starting in May, and the stock went from 53 all the way to 71 with good money flow and positive earnings surprises. But here again, there's this pattern that we're going to define very definitely, completely on the next set of slides, where the stock makes a new high, just like WellCare did, the upper volatility band, and look at Chaikin Money Flow. It's red, not green. Who was buying and who was selling? Well, smart money was selling, and the public was barreling in because there were takeover rumors. Qualcomm actually announced a takeover of another company in the chip business, NXPI. But what an opportunity to sell Qualcomm if you had bought it on any of these buy signals and say, sayonara. I've made my money, let someone else take on the risk, and lo and behold, the stock was down 3% today because there was some profit taking in the big cap stocks. Now here's a stock you all know called Starbucks, where you had a bearish personality change back in February. The power gauge was already bearish, and the stock started underperforming the market, and it was trading at around 58, 57, 58. And look what it's done over the ensuing 10 months. It's gone nowhere. Dead money. The market agreed with the model. There's that combination of fundamentals and technicals. That's Chaikin Power Gauge rating is red, so the fundamentals are, those 20 factors are negative, and it's underperforming the market. That's the kind of stock you want to be buying put options on. You want to be out of those stocks, because when it really gets ugly, this is what happens. Sun Edison, the darling of the solar energy industry back in 15, again, made a new high in June, July of 15 with money flow negative. And then the power gauge turned bearish with the stock at around 26. Money flow was already weak. It started underperforming the market. There's that combination. We call it the dynamic duo. The market is now agreeing with the model on the downside, and firms like Merrill Lynch were recommending the stock at 28. Big hedge funds had big positions in it. But the power gauge, that objective, done-for-you analysis, as Bob said, it's almost like autopilot, self-driving car. And these sell signals could have enabled you to buy put options ahead of the company filing for bankruptcy. And I was fortunate enough to capture this shot of Jim Cramer on the set with David Faber, CNBC, when SunEdison filed for bankruptcy back here in April of 16. Merrill Lynch, by the way, put out a sell recommendation at $3 on the way down from 32. That's why you've got to become independent of gurus and Wall Street research and barons. They're late, and you've got to be on target, on point, and as early as you can be. And if you follow this discipline, you're going to avoid stocks like SunEdison. Now, we exhibited at an Options Industry Council conference in Tiranay, this beautiful resort in Southern California, south of Los Angeles, back in May. And I was demoing Chaikin Analytics to an advisor, because these were advisors who attend the conference, who use options in their practice. And someone tapped me on the shoulder and said, "I'm Edward from Philadelphia." And I said, "Well, we're from Philadelphia." He said, "Well, I bought SunEdison," because I was demoing at the time to someone else, at 15 on the way down because Merrill Lynch, my firm, was still recommending it. And if I'd been using Chaikin, I would have saved a lot of pain and money for myself and my clients. And you can too. And here's another example of a company that's getting into solar late in the game. Elon Musk controls both Tesla and Solar City. Solar City is a swamp of losses. Elon Musk, sad to say, is the P.T. Barnum of the 21st century. He'll say anything to promote his stocks. I've gone so far as to say, don't believe a word he says, because he never comes through. And he controls Solar City, which is deeply in debt. And he's convinced the shareholders and the board to let him go through with that transaction. Power Gauge rating on Tesla has been bearish or neutral for well over a year and a half. You're paying too much for $1 of revenue. If you look at it objectively, whether it's self-driving cars, whether it's electric cars, look at the competition: Mercedes, BMW, the Japanese car makers, General Motors. Realistically, is Elon Musk going to be successful competing with these people? Well, I don't know, but the Power Gauge certainly sees risk. And the market is agreeing, because the stock is going nowhere. And now, with a Trump victory, guess what? Solar is no longer as hot as it was in an Obama administration that was more dialed into climate change and renewable energy. At least based on what he said in the primary, Donald Trump thinks climate change is a hoax. So is he going to encourage solar panels and electric cars with government subsidies? Maybe not. Bottom line is, Tesla is the kind of stock that some very successful billionaire fund manager, Ron Barron, said, "I'm going to make 35 to 50 times on that stock over the next 10 years. Well, good luck, because you're going to overcome a lot of odds to get there. And along the way, you're going to have to experience days like today where the market is up and Tesla was down 4%. Those are unpleasant, sleepless nights for someone who's a buy and hold investor in a stock with a bearish Power Gauge rating. Now, the final pattern I want to leave you with, you've already seen sort of advance warning of, we call it stealth buying and selling, and you monitor it with Chaikin Money Flow. The large institutions, and Bob ran a $300 million pension fund for Sunkist back in the 90s when $300 million was a lot of money. Institutions have gotten so big they can't execute their trades on one day, whether they're buying and selling. So they try and mask them because they're paranoid about people knowing what they're doing. That creates a pattern we've seen called stealth accumulation and stealth distribution. Here's Gibraltar Industries. It's in the building products area. If we get infrastructure rebuilding under the Trump administration, Gibraltar is going to benefit from it. But even before that, you had a series of 4 positive earnings surprises. And along the way between May and October, you had stealth accumulation. Normally, the Chaikin Money Flow will oscillate between red and green. Green meaning it's above the zero line, looking back 21 days. Red meaning it's below the zero line. For over 5 months, steady accumulation, even when you had 10% pullbacks in the stock. Stealth accumulation. Insiders, knowledgeable people were buying Gibraltar. And the power gauge was bullish, and you wanted to be buying these dips. Now, yet again, we see another pattern of new highs in the stock and negative Chaikin money flow. Great time to take money off the table. If money flow starts to rebuild, you can get back in on a pullback. If not, say thank you very much, because from the point in time that the stock broke its downtrend and the dynamic duo was strong, meaning relative strength and the fundamental power gauge rating were bullish, the stock went from 26 to 44. That's a nice 50% move in a market that's gone nowhere. So take your money off the table. And here's a stock where you really could have taken your money off the table, McDonald's, which is one of those momentum stocks that was outperforming the market but with no fundamentals to support it. That's that high wire without a safety net, because new management was not turning this company around. Money flow was strong and relative strength was strong, so the stock was one of those momentum stocks that makes new highs, but ultimately it made a new high with negative Chaikin money flow. If you learn nothing from this webinar, but to look at Chaikin money flow, which measures institutional buying and selling when stocks are making new highs at an upper volatility band, and knowing when to leave the party or buy in on dips when it's positive, you've come away with a life's lesson learned. So that was at 130 in price back in May. And then the power gauge turned bearish at around 125 on McDonald's. It started underperforming the market, and it's been a terrible performer ever since. Stealth distribution, every time the stock rallied, money flow attracted institutional selling. You had a sell signal here ahead of an earnings report. And the stock here again is going nowhere, just like Starbucks. People haven't been eating out as much, in spite of the fact they've got money in their pocket. Perfect example of stealth distribution. Now, we talked about 6 pairs of buy and sell signals in Chaikin Analytics. You've seen overbought and oversold buy and sell signals. We'll show you some relative strength signals in a minute. But it's important to know that following the signals improves your options trading, because they're based on a disciplined set of rules and proven analytics. And they should give you the conviction to pull the trigger, just as we saw in that first example at the beginning of the webinar in FFIV. And it's a heck of a lot better than trading on your emotions. So here we're looking at Goldman Sachs, which is in the very strong financial sector, that had a buy signal back in late September ahead of a bullish earnings surprise. And with the Trump victory and the likelihood that some regulations are going to be rolled back, whether it's Dodd-Frank or some of the other onerous regulations that the Department of Labor has put on the brokerage industry and the investment banking world, Goldman Sachs spiked up close to 200 today. If you had followed the signal, you would have been buying it at about 165 back in the end of September, and there was never an ounce of pain. Now, how do you find the signals? We have dashboard in Chaikin Analytics for any list, index, ETF that you create or that we load into the system. And I use the dashboard from a webinar I gave just a week ago on November 2nd. I had bullish signals on some stocks like Pega, which actually did quite well. And there was a bearish signal on TripAdvisor. And I've been quite negative on TripAdvisor based on the power gauge rating for over a year. And look what happened. That reversal sell signal just a week ago came at 61.63. And lo and behold, a negative earnings surprise happened. 2 days ago, the stock traded down from 65 all the way to 52 today. We now have intraday charts in Chaikin Analytics. For those of you who've been on previous webinars, we have intraday charts and updating bars, so you don't have to go off to your online brokerage platform until you want to execute a trade to see that TripAdvisor made a new 52-week low today. But look where the power gauge has been. Since late December, it's been bearish and the stock's gone nowhere, and you had a series of negative earnings surprises, and this one took the market by surprise, apparently, because the stock traded down over 10 points, making any put option purchases very, very profitable. And you had that negative earnings alert. Now, we talked earlier about the need to play good defense. Good defense means using proper money management and risk management techniques. And it often leads to good offense, because good defense means getting out of the stocks that you shouldn't be in. It's the stocks you don't own that matter. It really is the key to making money in the markets. And here's an example of an industry group, the apparel industry, which has had some very highly visible names that have had very, very weak price performance, from Coach to Hanes Brands to Nike to Under Armour. And part of playing good defense is knowing which industry groups are likely to underperform and being out of the weak stocks in those industry groups. So Nike's a perfect example. Power gauge turned bearish in late February. You had a personality change from outperforming to underperforming. And again, a well-known name, had the benefit of a lot of high-profile athletes, but it's traded from 62 down to new 52-week lows. And by the way, these are the same stocks that are not participating in the rally. Tesla's not participating. Nike's not participating. Under Armour's not participating. So if you can cleanse your portfolio and your long options trades of these stocks and focus on these as put candidates, you get an ideal put setup here when you get an overbought sell signal, a new 8-day high with Chaikin Money Flow negative ahead of a bearish earnings surprise. You're putting the odds in your favor, and this is really what good defense is all about. Now, we're coming to the end of earnings season as we come toward the end of the webinar, with a little bonus thrown in. And stocks are volatile during earnings season. I know a lot of people are reluctant to trade stocks during earnings season. Bob Lang showed you why you should with his trades on SodaStream and Nordstrom in the last 2 days. Volatility creates opportunity. That's why we created this whole discipline methodology, so that you can have the confidence to pull the trigger during earnings season. Because there's a lot of speculation in the media about whether companies are going to meet, beat, or exceed estimates. And one way to know if a stock will do that is to look at the power gauge rating. As I said earlier, it's your GPS for stocks during earnings season. Now, here's an example of why the power gauge rating is so important. Back in March, PVH, which is one of the apparel stocks that actually made a new high today, was due to report earnings, and one of the analysts at thestreet.com wrote this article saying PVH closed down ahead of tomorrow's earnings. Now, Jim Cramer, who we love, said exercise caution with PVH ahead of earnings. This was at 5 o'clock on March 22nd. The company reported earnings the next morning before the opening, and guess what happened? They beat estimates, and the stock was up 7%. So even the gurus don't always get it right. And here's a chart of what PVH looked like. That first yellow arrow shows you incredible Chaikin money flow in a stock with a bullish power gauge rating, which then gave you yet another positive earnings surprise. And you've had 2 more since then, with buy signals ahead of them to give you solid low-risk entry points. Now, PVH, as I said, in the weak apparel group, so the industry group is weak, but the trends for PVH are strong, is due to report earnings on December 7th. We've got a bullish earnings alert, so we're probably going to get another positive earnings surprise. And it traded up, almost equaled its 52-week all-time high. Chaikin money flow is negative. What does that tell us? Let's take some money off the table. got plenty of time, a month ahead of those earnings, to get back into the stock, and the industry group is weak. Now, Michael Kors was due to report earnings after the close. I always like to have a stock in the deck to see what happens when earnings are reported. So Kors also has a pattern of positive earnings surprises, but the chart is not nearly as strong as PVH. We see up here that our earnings module told you they were due to report after the close. Estimates were for 88 cents. They actually exceeded estimates. The earnings report came out at 4.15, was 95 cents. But guidance, which is another key element to the earnings report, how a company says they're going to do going forward, was soft, toward the lower end of the range. And the stock's down, but guess what? It's only down 2%, and it was up 3% for the day prior to the earnings. And with our new news functionality, you can see what was expected. And you also see that Zacks Investment cut Michael Kors to a hold ahead of that earnings report. We didn't have a positive earnings alert, no green exclamation point. Analysts have been lowering their estimates going into the earnings. So the stock, which basically peaked in this top of this trading range, is trading at around 49.70. It's down about 37 cents on the day after being up 3%. And we'll see how Wall Street evaluates the earnings tomorrow. So this is one of those rare instances when we put a stock in the deck and we don't get that positive earnings surprise, but no surprise to us because we don't have the positive earnings alert indicator. So very powerful new addition to Chaikin. Now, we saw TripAdvisor in the online travel business report a negative earnings surprise because the Power Gauge rating was bearish. We could expect that. And here's Priceline, which reported just 3 days ago.
Hey, Mark, I had a question for you. Where were you showing that earnings surprise indicator again? I missed it.
It's right after the estimate. At the top of every chart, there's either a red or a green exclamation point or no exclamation point. So in the case of PVH, you've got a green exclamation point. So we expect that that earnings report on December 7th will be a positive earnings surprise. But since analysts have been lowering their estimates on Kors ahead of the earnings, there's no positive earnings alert. It's being balanced by the fact that there were 4 positive earnings surprises in a row. Now, today's earnings report will show up as a positive earnings surprise because they beat estimates by 7 cents, almost 10%, but the guidance so far has ruled the day. Now,
so I was going to say, for instance, like in NVIDIA, right? They reported after the close, right? And they're up about $10. And I noticed it was positive. I think the EPS was positive on that one. So prior, so that was another great tip off as well too, right?
Yeah, this is a really powerful indicator because it synthesizes earnings surprise, past earnings surprises, analyst estimate revisions, changes in analyst opinions. It's the equivalent of the Zacks rank for free. A lot of people pay a lot of money for that. But here's Priceline in the online travel business, which reported on Monday, and they beat estimates by a wide margin, by almost 7%. And the stock spiked up to a new high, as opposed to TripAdvisor. Now, the Power Gauge had turned neutral, but you had a buy signal back here at about a 14.25 on the way to 15.75. Now, you're going to play that with options, obviously, not buying $1,500 stocks unless you're willing to buy 5 or 10 shares. Most people don't like doing that. So you're going to play that with options. But there's your buy signal ahead of the earnings report because the Power Gauge had been bullish and we had this bullish earnings alert indicator more likely to report a positive earnings surprise, which it did. So how wonderful to have known to be bearish on TripAdvisor but bullish on Priceline. And then finally, in the drug group, Pfizer, relative strength breakdown back here in September. Ideal put setup, Power Gauge was bearish. Negative earnings surprise takes the stock down. Now, what have we done here in this post-election rally when the drug stocks are going up? Because They feel that maybe the pricing pressure and the regulatory pressure will not be as intense under a Trump administration as a Clinton administration. You've retraced 50% of this decline in this very fine drug stock that went from 37 to 30 with a nice dividend yield of well over 3%. And you've got a 50% retracement with negative money flow. What does that tell me? Take my money off the table. If I was holding on to Pfizer for the dividend, great opportunity right here at resistance to get out of it. But the key here is the put play that you had from 34 all the way down to 29.50, which in a conservative stock is usually very profitable because the premiums are not very high. So we've got a screener in Chaikin Analytics that can help you screen for stocks that are due to report earnings. I use this in a very unique way in our November 2nd webinar. I screened all rated stocks, 4,500 of them, looking for stocks with a bullish rating that had a strong earnings surprise factor and where the analysts were raising their estimates. And then to zero in on supercharged candidates, I said, I want to see stocks where on a 1-month basis, they're at or near their highs and where they're up 5% for the month. Now, remember, on November 2nd, we were in the midst of 9 straight down days. We had already had 5 of them. And I narrowed 4,500 stocks down in about 10 seconds to 17 of them. Now, you've already seen some of those stocks in the webinar. Goldman Sachs went from 176 to 198. And Valero was making new highs yesterday. And here's Northrop Grumman, aerospace stock, going to benefit if Trump rebuilds the military as he says he wants to do. The stock was 225. It met all those criteria, had a bullish power gauge rating. And here's what happened to Northrop Grumman. It had already reported a positive earnings surprise. That's how it ended up on the list. And it went sideways for 3 to 8 days, in this case 8 days, after the buy signal and the breakout. And then when Trump emerged victorious, the stock spiked up to 245. It was 225 when that screen found it. So the screener puts you in control. We teach you how to use it. This is a very unique application. I know Bob's going to be on the horn with me after the webinar saying, how'd you do that? I want to do that too. Because you can really find potential winners by applying a little bit of logic to the screen. Because stocks that report positive earnings surprises, guide higher, beat revenue estimates, and respond positively to their earnings reports tend to continue to outperform well over the next 3 months. You just have to find them, wait for the pullback, and don't pay up. Now, here's another aerospace stock, smaller cap, only a $2 billion market cap, Moog, which had a bullish rating ahead of the election. A lot of buy signals, ideal setups, outperforming the market. It's oversold with positive money flow. You want to buy it. There's your oversold. This is the relative strength buy signal, by the way. All these are on our website. Whether you're a visitor or a subscriber, we describe the basis for these signals. In this case, stocks outperforming the market, trades under its 21-day average, and then moves back above it. It's a classic pattern. And it would have helped you find Moog, which is in a strong industry group that's now going to benefit from a Trump victory. And the stock spiked up from 57 all the way to 64.
Hey, Mark, I wanted to also tell you in this group, this defense group, this is one that I covered with Jim Cramer on Off the Charts a couple months ago. I went through, I literally went through the whole group, about 10 stocks a couple weeks ago, and most of them were all neutral, but improving charts. Lockheed Martin actually, with that good earnings, came out, and then, but the one stock that was bullish on Chaikin Analytics that went green right at the end of October, I jumped on it, and it's up about probably a good 10%, 12%. You know which one that is, Mark? It's HRS.
There you go.
Harris. Okay. So this one went green on the Chaikin Power Gauge. I want to say it was the 28th or 27th of October, and it was around $89-90 or something like that. It's got positive. It's got green Chaikin Money Flow. It's overbought, It's got all the qualities. But again, it's not very bullish, but it's still bullish. But I mean, again, this is another one that if you scour the groups, okay, and just find the best of the best. That's what I've been able to cull from using the analytics. Just finding the best of the best. If you put a little bit of work into it, let it work for you. You find the best. I mean, all those names have been strong, but I mean, why not go with the ones that at least the analytics will, show it to you. I mean,
and this leads to better sleep, because you have less anxiety about the future when you know everything is lined up fundamentally. Sure, you can make money in a stock with a neutral rating. It's a lot harder to make money in a stock with a bearish rating, but when everything is lined up like it is with Moog or it was with Northrop Grumman, life becomes a lot easier as a trader. And the previous earnings report just on Friday, $1.16 versus 79 cents, the stock actually went nowhere on that earnings report. What a powerful earnings report. You could have bought this ahead of the election at 57 on the way to 64. That's a really good trade.
So, hey, Mark, by the way, we were talking before we got started. There's a remember one of the two stocks I told you I got in for earnings today?
Yeah.
Disney's actually up over 98 now.
Even though they had a slight earnings miss. So
yeah. But you know what? It showed up bullish on the. It was fine for me because it showed up bullish on the analytics, and I think it just went green on the power gauge. Isn't that right?
It did. It went green yesterday ahead of today's earnings report. So Joe Bacella was actually teaching that on one of his morning training sessions here today. So we haven't included a lot of testimonials in the deck. Some people like them, some don't. I think they're important because they show you what real people are doing with Chaikin Analytics. But I've included this one, 400% return in 2 weeks. After using Chaikin Analytics, I have to say, trades I found with the system were really impressive. And the key here is he found them. We didn't tell him about them in either our weekly market letter or our daily letter, and he's using options, so 400% return on an AMD call spread or Google put spread made 100%, which wasn't easy because the Google was pretty strong back in June, July. It's the first tool I've ever used that delivers what it's promised. Thank you, Torsten. So last part of the webinar, post-election, got to focus on the sectors and industry groups that are going to do well. We've already talked about aerospace, likely to benefit. Some of the drug stocks and drug distribution companies have been very strong in the theory that there'll be less regulation. But it's clear-cut in the financial sector. Financials were strong heading into the election, probably on the basis of a interest rate hike, which helps the banks and the insurance companies. Now with a Trump victory, there'll be less regulation. They may roll back some of the regulations that have been put in place, like Dodd-Frank, that have been hampering the institutions. Some of you may feel that they're helping the consumer. That's a social issue that we don't want to get into. Technology is right at the top of the heap. We rank them by the number of stocks with bullish versus bearish power gauge ratings. And now healthcare again at the bottom, consumer staples, utilities, which are less attractive with interest rates on bonds over 2%, and consumer discretionary. That's where Nike, Under Armour, McDonald's, Chipotle come into play. So it's pretty clear cut, and I thought we'd just look at one of the sectors, and we'll use the Select Spider Sector ETF, the XLF. There's about $12 billion in that. It's actively traded. It's been outperforming the market, bullish personality change since late August. So this isn't a new phenomena. It's been leading the market, made a new high when the market was down last week, 9 straight days. And I took this from the webinar I did last week on November 2nd and circled 4 stocks. And all 4 of these are stocks that we've recommended in our weekly market insights as our bullish stock of the week. Citicorp, Goldman, you've already seen the chart on Goldman. Traded up from 177 to 197 since last Wednesday. Morgan Stanley and Principal Financial Group. So let's see those charts. But first, let's look at what the XLF did. Now, this was a week ago, and we featured this in a webinar, so we're not just cherry picking. This was the one sector we featured, and those were the stocks we talked about. And with a Trump victory, look what happened. Bingo. Spike up to new highs. And these stocks have really performed well. And let's take a look at some of the charts. So Citigroup got a buy signal back here in September. That's when we recommended it as our bullish stock of the week, 47 to 53.5. A buy signal just before the election. Oversold buy. I'm sorry, this is the relative strength buy. Tuesday. You would have known about that. You could have bought it. The industry group is strong. The stock was oversold and a spike up to new highs, new 6-month highs. Principal Financial, we recommended that. We'll show you the recap of these. Stock pulled back just as we wanted it to, under 54, and now it's spiked up today to a new all-time high. So Chaikin Analytics now comes with options play, screener, earnings alerts, intraday charts, and news. We have not raised the price once since we launched the product in January of 2013. John Malden, who's sort of a top-down macro guy who's on CNBC, holds a conference every year that costs over $10,000 to attend, got interested in Chaikin Analytics because one of our directors sold him on taking a closer look. And he said, my analysts are enthusiastic. I am impressed by what Mark has done. These aren't traders. These are longer-term macro thinkers with newsletters. And he said, we now use it to analyze all the trades and recommendations of our writing team. It's become part of our routine due diligence for vetting and evaluating potential investments. That's what Bob Lang's talking about. And Bob's a trader. So everybody from traders like Bob Lang, successful traders, to highly regarded top-down macro people are using Chaikin Analytics. And you can too, because we're going to give you an offer that you can't refuse. This is sort of Godfather territory. Normally $1,950 a year as a webinar special to the explosive options community, reducing the price to $1,750. The offer expires Sunday, November 13th. Joe Bocella's typing the link to our fulfillment page, chaikinanalytics.com/explosive. Or you can call sales at chaikinanalytics.com, 877-697-6783 if you have any questions. Now, along with everything we've shown you, we add additional value because Joe Bocella and his customer success team, Michelle and Josh, small group tutorials. There are a lot of features in Chaikin Analytics with tremendous benefits for you as a trader, but you've got to very quickly learn how to use them and where to find the features that are good for your style of trading. So small group tutorials. If you subscribe tonight, you can be on a tutorial tomorrow. You get my colleague John Schlitz's daily morning insights, comes in before the opening. You don't have to stay glued to CNBC to know what happened overnight or overseas. Now, you know, pre-election or post-election, the Dow futures were down 800 points. By the time we opened, the Dow futures were flat to higher, finished the day up 280. And you get my weekly Market Insights newsletter where I give you my market view, bullish and bearish industry groups. We've featured coal and aerospace, financials as bullish for the last 3 months. We've featured some of the bearish stocks in the consumer staples, soaps and cosmetics, restaurants, and so forth as bearish. And here's a recap of our last 5 bullish stocks of the week. Didn't put one out this week ahead of the election. We actually showed you a bearish put spread in the SPY if you were concerned about the election. Didn't recommend it, it just said here's the best way to trade it. 5 recommendations, you've seen most of them on the screen. Buy Principal Financial if it dips below 54. It did that, it's now trading near 58. Buy Goldman Sachs on pullbacks toward 170. Buy PVH at 105, we saw it at 114 today. By ARRS on pullbacks, it did do that. It's the only one that's flat. The others are all up. And by Morgan Stanley in anticipation of new highs in the 34.6 area by year end, traded at 38 today. So the point is, we give you the tools, teach you how to use them, become self-sufficient, but we also give you some guidance along the way so that you can see what I'm thinking and how I come to my decisions, and that's really helpful. So one final testimonial, 10x return in 5 days. In the 5 business days I've been using Chaikin Analytics, I've paid for the subscription over tenfold. These results are nothing short of outstanding, thanks to the entire Chaikin team. And this really is a team effort. I started this with my wife, Sandy, 7 years ago. We're now 25 people here in Philadelphia dedicated to your success. So I want to make it as easy as possible, painless as possible, to encourage you to subscribe to Chaikin Analytics. So if you subscribe by midnight tonight, we'll take an additional $100 off, reducing the cost of an annual subscription to Chaikin Analytics to $1,650. ChaikinAnalytics.com/explosive. And one last fast action bonus. These have really been popular. If you register by midnight tonight, you'll get access to my live webinar next Tuesday from 1 to 1:30, exclusively for people who subscribe tonight. So we usually get about 15 to 20 people on the webinar. And I'm going to talk about which stocks and sectors will benefit from a Trump victory. We'll recap the last 7 days and which will be hurt, so you are well prepared for 2017. Now, Joe, why don't you click on the link and show people how easy it is to subscribe to Chaikin Analytics, and talk for a minute about what the onboarding process is going to be.
Yeah, absolutely, Mark. So as you can see, I just went ahead and in my Zoom chat window, you can see over here on the right-hand side, when I click on this link, ChaikinAnalytics.com/explosive, you don't even have to type that in. All you need to do is click on the link. It'll take you right to this page here where you'll see the discount code that Mark is offering before midnight tonight, $300 off for your full subscription, will automatically be applied. And of course, regarding the onboard sessions, yeah, so you know, these onboard sessions, we noticed had a lot of new subscribers coming to the program. People are doing really well, but we wanted to make sure people are getting the full experience, you know, making your own list of stocks, bringing in your own portfolio, maybe importing stocks from other sources. That's just some of the material that we cover in our onboard sessions, making sure that you can really hit the ground running, making sure that you have all the information, all the stocks and ETFs that you trade front and center within your program. We'll also show you a daily routine, how we want you to be able to start your day when you're using Chaikin. So again, these onboard sessions do take place every day at 2 o'clock Eastern time. Given that it's Thursday, we have one more left this week. So it just makes it even better to take advantage of Mark's deal here. Again, $300 off for a full year of Chaikin Analytics. And as soon as you subscribe, we'll get you in registered for tomorrow's 2 o'clock onboard session. So no better way to really start out your experience with Chaikin Analytics than with one of our onboard sessions.
Well, thank you, Joe. And with that, I'd like to give the microphone back to Bob Lang, who may have a couple of final things to say, and then Joe will wrap up the webinar.
Mark, I wanted to thank you very much for spending a little bit of time with everybody today and showing everyone how they can take advantage of Chaikin Analytics. And I can tell you all, everybody out there listening, as a user of Chaikin Analytics, the amount paid for this is a pittance for what you can make by using the tool. And I am a living, breathing example of that. And frankly, I've been learning about using the tools. I listen to the webinars. I listen to a lot of the recordings and so forth. There's so much information out there to absorb. But as Mark says, if you're not using some helpful tool like this to guide you along to find the right ideas, you're going to get lost and you're going to end up overanalyzing things. As Mark said, analysis paralysis is one of the things that many people suffer from. It's just because people are trying so hard to get it right. Mark and his team have done everything they possibly can to help you get it right, not only on time, but just executing things absolutely perfectly. So I encourage all of you guys to give it a try. Again, I use it myself every single day. A lot of people in our chat room use the tools. We've been doing the webinars here together for a couple of years, Mark, and everybody in the chat room that I have, and even some of the Explosive Options members have purchase the tool and use it and love it, and it's a staple. It's an absolute requirement for them to their success. So I want to I want to let everybody know that I think the deal that he has out there is just phenomenal. And again, you get to come on the webinar with him next week, so that'll be that's a great treat as well too. So Joe, go ahead, take it away. I hope everybody has a chance to sign on and to sign up with Chaikin Analytics, and we'll see you guys. I guess Mark will see you in a month, right?
Absolutely.
Sounds great.
All right, everyone. I want to thank you all so much for spending your time with us this afternoon. Again, one more time, chaikinanalytics.com/explosive. I think you can see the link now in the chat room. So again, take advantage of that. And again, we'll be here tomorrow afternoon at 2 o'clock for everybody who subscribes tomorrow. Don't forget also to take advantage of that special webinar that Mark is offering for the post-election assessment. Just like Mark mentioned, these have been some really successful sessions that we've held lately. We did a series for anyone regarding earnings season 2. So again, it's great that Mark's doing these sessions as well. So make sure to take advantage of that. And that's just for anybody who attends this webinar today. So plenty of reasons to join us. We hope to see you tomorrow for our onboard session. Don't forget the webinar's been recorded. We'll be sending this out to you tomorrow morning. But in the meantime, we want to have you in here with Chaikin Analytics to get started. So on behalf of everybody, thank you so much for spending your time with us and have a wonderful evening.
Thank you, guys.
Thanks, Bob. Appreciate this opportunity.
Quick shout out. Thank you to all the to veterans out there. It's Veterans Day tomorrow, and today is the 241st anniversary of the Marines. And I know Mark living in Philadelphia knows that there's probably going to be something going on tomorrow. But thank you for all the vets. Thank you all for your service and everything.
Yeah, and we support the Navy SEAL Foundation. Typically, when we do a live event, we donate 10% of the proceeds. In fact, I'll make a commitment that for every sale that we make tonight, we'll donate 10% of that to the Navy SEAL Foundation. We have Navy people in our family, Top Gun pilots. We've seen the work that they've done. We saw them out in San Diego. So as an added incentive to get you to subscribe, every sale that comes in tonight, 10% of that will go to the Navy SEAL Foundation.
That's beautiful, Mark. Wonderful. Wonderful gesture.
Good night, everybody. Thank you, Bob. Thank you, Joe.
Thank you, Mark. Thank you, Joe. Have a great day, everyone, and we'll see you guys tomorrow.